Dennis, welcome back. Great to see you.
Thank you, Carl. Thank you. Good to be back.
So as this window now reopens, I wonder, do you think there's going to be more variety in how Fed officials speak about the terminal rate, at least, or the way in which the Fed is playing this game? And do you think Evans' comments here are material?
Well, Charlie Evans is just one voice. I suspect there are other people on the committee who feel similarly. The most recent indication we have is the dots in the SEP of last week, and they were very tight. There were, I think, 8 or 9 at 4 1/4 to 4 1/2, and then just one fewer below that. So it strikes me that committee consensus is very tight at the moment, and it looks like the path of policy to either 4 to 4 1/4 or 4 1/4 to 4 1/2 is in everyone's mind.
Right. Evans did say that at that level, he thinks that would look restrictive enough. Would you go along with that?
Time will tell. You have to see how inflation actually reacts to this. I think there are two basic scenarios, very simplistically put. One is that inflation continues to be stubborn, and the other is that inflation softens or disinflation, as desired, actually occurs. If you can tell me which of those scenarios plays out, I'll tell you whether it's restrictive enough.
So just to dig into that a little bit more, Dennis, then where would you be looking at the data where inflation is concerned? Because there are many in the market. I mean, we had Kathy Wood on just this morning on CNBC talking about the fact that inflation has peaked. But we know that that's not necessarily going to be the case when the Fed looks at its preferred data point, the PCE, later this week, which is lagging.
Mm-hmm. Well, I think it's important to follow the month-over-month numbers or at least the quarter-over-quarter, meaning the shorter-term indications of the current run rate of price increases. We obsess over the 12-month numbers, and there's a lot of history in that, and those numbers that really are 9, 10, 11 months ago. So I would be watching the month-over-month numbers. We have a PCE inflation number coming out on Friday of this week, I believe. That's the next indication of what inflation was doing in August. And maybe we'll see some signs of encouragement. The problem the Fed has, and I felt this when I was there, is they're always looking in the rearview mirror. You've heard that before. And the numbers basically are telling you what was going on several weeks ago when the surveys were done. They don't tell you what's going on now.
You know, one of the things, Dennis, the market was a bit edgy about going into the month was QT. And I wonder, do you think we can start to draw some lines between that process and what Treasury volatility has been like past few weeks?
You know, it's still very early in the process. I think the Treasury volatility is more markets roiled by all kinds of circumstances that have come together. A lot of uncertainty, a lot of concern about the path of policy and the higher rate environment. It's a little too early, it seems to me. September was the first month in which they hit full stride in quantitative tightening. So I'm not sure you can connect those two at this time.